Hey, what's up, guys? Good morning and happy Wednesday. Happy FOMC day. All right, quick sound check. And I'm going to try to keep this short and sweet, guys. I'm actually working on some videos for you folks here in the Essentials room. And if I don't get them done this morning, then both Amelia and Miranda will beat me up. Hey, what's up, Russ? Good morning. Andrew, Renee, Brian, JB, Omer. All right, guys. So I don't plan on doing too much today until at least after the Fed at the latest. But maybe tomorrow, maybe Friday. And as far as a swing trade, keep in mind, we're still stuck in a big box. So until that range breaks, it is a little bit more of the same. But in the context of the box, for now, what we're looking for is either moves back towards the top end or potentially moves back down towards the bottom end. Bottom end of the range being about 4,400. And right now, we have some signals and a few things across the market, which of course could change today. But we got a few things for now that point towards, probabilities-wise, better chance this daily squeeze break short, and you get that flush back down towards the bottom end of that range. Now, where I think the probabilities of that in the short term kind of get canceled out, meaning pump the brakes on loading up on the shorts, is if we can get back above the daily 21 EMA. I don't think that necessarily sends the market back towards the highs, but I think if they can get the ship back above the 21, it might just be more of the same back and forth. But as far as a move lower here, the squeeze itself, on my indicator, is the perfect short. Got the red label, got the squeeze arrows, and again, the target would be 4420. We'll call it 4400. So momentum-wise, structure-wise, moving average crosses, stacked DMAs, all that good stuff. The squeeze itself is more aligned for a move lower. And then you've got the few things that we talked about on Monday morning. One problem for the market, that if anything will just make it harder for the market to go higher, continues to be the strength here in the dollar. And then if you look at the weekly chart here of the dollar, granted, I think you might see a couple dips along the way, but not be too crazy. But as far as the weekly squeeze goes, this is week 2 of that squeeze firing to the upside. So from March up until 2 weeks ago, the weekly chart is going through that compression phase. And now as the squeeze fires, you're going through that expansion phase, the release of energy. Not saying the dollar is going to do this, but an example of what you can get from a weekly squeeze would actually be the S&Ps from back in May and June. The squeeze fires the first week of June, and then all through June, all through July, into early August. You're getting that big push higher out of that weekly squeeze. So again, not to say the dollar is going to make a similar move, but that is what a weekly squeeze can lead to. And for conversation's sake, if you get a big move like that, where the dollar is just strong for 3, 4, 5, 6 weeks, doesn't mean the market has to roll over, just means much harder for the market to go higher. So we got problems in the dollar. And then I think one of the uglier charts in the market, which by default kind of tells us the market is not all that great, is the RSP, the equal weighted index. We have sell signals on the daily, the 4-hour, the 2-hour, and the 1-hour. We have a daily squeeze that fired short on Monday. And if they can't quickly get the RSP back above that 200, there's just a lot of room to drop here. And remember, that's your equal weighted index. There's no influence from Amazon, Apple, Google, Microsoft. Just takes those 500 names in the S&Ps. And then from there, they each get an equal weighting. So if anything, it's more of a realistic look of the market. And now, speaking of the tech stocks, they have been the few things that are trying to keep the ship afloat as of late. As far as the structure of the QQQ, not the greatest. So if this was going to be leadership, if this was going to save the market, I think we'd look for a lot more than the chart currently in front of us. And then the big thing I wanted to touch on this morning is momentum. So for all of you with the big three indicator, pay attention. The last couple of weeks here, we saw them try to take things higher. And they did take things higher. At no point, though, did they fix the momentum problem. For the S&Ps, the Qs, NVIDIAs, the semis, Apples, ever since, call it June, July, momentum has actually been on a decline. And generally speaking, momentum has been below that zero line. So the Qs, for example, you get the initial flush. We'll call it a short squeeze. All right, they take the market higher. And though momentum does go on the up and up, we never get that big official cross where they get and keep momentum above that zero line. They did that back here in May. Push it above zero, keep it above zero, and now the bulls have got some wind at their back and some momentum to work with. So the Qs go from 355 to 380. They are not left with that positive cross. So you're going higher, you're going higher, you're going higher. At no point does momentum say, hey, let's keep going higher. If anything, momentum is pretty cozy right now under that zero line. Does that mean the QQQ has to fall apart? No. It just means we're not going to see a sustainable move higher if they can't fix momentum. So we're kind of seeing that left and right. Same thing here for the S&Ps. Get the initial flush. You get the short squeeze. Momentum does go higher. You never get the official cross. I think the biggest example would be NVIDIA. And just look at this as your gas tank. The gas tank peaked. So in other words, we've been running out of gas since early June. They take NVIDIA from 400 to 500, which in the matter of a handful of days, that's a big time move. Momentum rises. They actually get it above the zero line, and then they drop the ball. Does that mean NVIDIA falls apart? No. What it does imply is that NVIDIA is not ready to trend higher. Back there, you can trend higher because you've got the momentum. As soon as momentum peaked, all that trending higher action came to an end. So just things to keep in mind. And again, even though we're trading in a big box, these are the little things to pay attention to. I might not be in a big uptrend. I might not be in a huge downtrend. But in the context of this box, does the structure lean bullish or bearish? On my end, the structure would lean bearish. We're under the 50, we're under the 21. Does momentum lean bullish or bearish? Under the zero line, it leans bearish. All right, just those two little things, a little bit of structure, a little bit of momentum, they can help us gauge the moves inside the box. Everything leans bullish, you probably go back up towards that 45.50. Everything leans bearish, as it currently does, better chance of headed towards 43.50. Now, if we can break that range either which way, they break it to the upside, we might have an uptrend to work with. We break it to the downside, we might get a downtrend to work with. But in the box, guys, those are a few things to watch. And then I think along with the dollar and the list of issues we currently have, think as long as Apple's under that daily 21 EMA, they're trying to push it, so we'll see if they can get it done. But Apple under the 21 EMA with a daily sell signal, it's just never going to be the greatest thing for the market, being how heavily weighted Apple is. So watch Apple under 180, watch the dollar, and then watch the S&Ps under that daily 21. Keep an eye on momentum, keep an eye on your structure. And then as far as today goes, just be a bit careful out there. For what it's worth, I've had some of my most frustrating days either being long or short into the Fed. It's a little bit like being long or short before an earnings announcement. You might have the perfect short setup before the earnings announcement. So you jump in, you buy puts, you get short. Following morning, everything could change. Now, I don't expect too much from Powell and the Fed today, but I don't think you have too much to lose by just being patient today. Take your dog for a few walks, get through the Fed announcement, and then maybe tomorrow, Friday, the dust has kind of settled. Then you're coming in and you're looking for some swing trades. Even day trades can be a little tricky on a day like this. But all right, guys, there you have it. A couple things to keep an eye on today. If y'all have any quick questions, anything you want to take a look at, let me know. Otherwise, I will let you go and go finish up those videos. We got a daily squeeze in the NQ as well. So for all you swing traders in here, if you want to keep things just really simple, right now we anchor to these two daily squeezes. Got a daily squeeze in the NQ and a daily squeeze in the ES. 3, 4, 5, 6 weeks from now, chances are they've probably fired. So right now they're going through that buildup of energy. My best guess is 4, 5, 6 weeks from now, they've probably done the release of energy. So now my job as a swing trader, until that squeeze fires, is to watch the signals, watch the indicators, watch the puzzle pieces. What's Apple doing? What's the dollar doing? What's the RSP doing? Trying to get a really good sense of should the squeeze fire short or should the squeeze turn the corner and fire long? And that's big for us as swing traders because a lot of times our best trading will be when the S&Ps and the Qs have fired a squeeze. By default, everything just kind of takes off with it. Squeeze fire short. It's a great time to be short. Squeeze fire is long. Great time to be long. Mike, I've got nothing, my friend. I am sitting on a big fat goose egg right now. It's a pick your poison kind of thing going into the Fed. Where, right now I would want to be short. Knowing this signal could change in 30 minutes, right now I'd want to be short. I've done that on the Fed days before. And 10, 15 minutes later, you're kind of begging to no longer be short. And then there's a poison of, all right, I want to get short, but I'm going to be a good boy. I'm going to wait until the Fed is done. And then, yeah, sure, sometimes by the time the Fed is done, maybe you miss the entire move lower. I think that poison's a little bit easier to swallow. Like, dang, they got me. Had a good setup. I was patient. I missed the move lower this time around. That's an easier poison to swallow than, all right, JP's coming out to rock the mic. All I really got to do here is wait 4 or 5 hours, but I'm going to take the trade now anyways. That's worked for me a few times, more often than not. You kind of banging your head off the table. But all right, y'all have a good afternoon. For those of you in the mastery, I will see y'all at 10:30 Central. And then depending on today's action, maybe we'll do another session at the close. But I'll see y'all at 10:30. And for the rest of you, thank you for your time. Hope you all have a great day. Hope you have a great end to your week. And I'll talk to you all soon. Adios, guys.